Hey everyone, welcome to the 10 Invest channel. Today I'm going to discuss a strategy for investing or even for trading, which is the breakout retest strategy. But this is not just any other strategy because I'm going to focus only on multi-year breakout retest zones. Okay, so that's going to be the focus for today's video. So do stay tuned because it's going to be very helpful to spot low risk but high reward setups. So that's what we're going to discuss today in this video. I hope you're excited. I'm excited too. Let's get started. So first, you need to understand what is a multi-year support zone. Okay. Now, in technical analysis, multi-year means at least more than a year. In a normal terms, also, I think multi-year means more than a year. But a multi-year support zone here, we're talking about charts where you have a breakout which has been a breakout of at least more than a year or so. Now in this chart, I have credit access Grameen, which I covered this week Sunday. So if you haven't watched the video, do check it out. But here, credit access Grameen actually had a multi-year breakout here around. It's more than a couple of years breakout. So it was around October 2019 when it made this high, and then it did not make across that high until almost April 2022. Okay, so when I say multi-year support, this area which was previously resistance has now turned into a support. So we're going to look at multi-year supports of minimum 1 year or so, or at least greater than 1 year. Now that's what you have to look at. Now, why do I say you have to look at multi-year support zones? Because multi-year support zones are actually zones where we had a breakout, which means for last 2 years in credit access Grameen, people were literally in losses. Everyone who bought were in losses. But since this breakout happened, everyone is in profit. So anyone who is holding the stock at this point is mostly in profit, or at least majority of the segment, majority of the population, or majority of the people who are holding the stock are in profits, right? And then the stock kind of retests this zone, and now people who have missed this breakout here kind of tend to buy this zone. And remember, in technical analysis, the larger the time frame, the stronger the support or the resistance is going to be. So here, since we're looking at a 2 year support zone, the support is going to be very significant, and we're going to focus on these kind of stocks, and you must also focus on these kind of stocks where you have multi-year breakouts or multi-year support zones. Okay, so that is what multi-year support zone means. If you have do any questions or if this is not clear, do let me know, or do DM me on Twitter as well, and I can help you understand what this means as well. Okay, so now let's get started of how the strategy works. Now the first thing is you want to have a scanner. Now, a scanner will help you spot stocks or look at stocks, a select group of stocks, and you don't have to literally manually track or analyze all the stocks in the Nifty or listed in Indian markets. So here, we're going to look at this particular scanner here, which is a CCI weekly crossing above minus 100. Now, I have three other scanners. This is basically a dashboard. I've also done a video on this. The link for the dashboard will also be available in the description. You can check it out. But for this strategy, we're going to look at weekly crossing above minus 100. Now, why this scanner? First of all, CCI indicates momentum on either sides, bullish, bearishness, both sides. Now here, CCI weekly crossing above minus 100 means the stock basically has been falling or has been consolidating, because of which the CCI has gone into a bearish territory, because basically BCCI has gone to minus 100, which is bearish, and then the stock starts to reverse. So what happens when the stock starts reversing is CCI starts crossing above minus 100. So where it went from, let's say, 100 to minus 100, and now it's again coming higher back up. Now when it comes higher back up above minus 100, that is when the stock will come in a scanner. So let's take a look at this credit access example and see what the stock has done. Now here, at this point is when credit access Grameen would have come in a scanner, CCI weekly crossing above minus 100. And if you see here, CCI basically has been going higher and higher, and finally came above that green zone. It came into the green zone, which is basically the band for CCI. And if you look at the numbers at this point, it was, I think, around minus 96 or something. Now that's when it comes in a scanner. So first thing you have to look at is what is the stock doing at this point. Now, if you look at the stock here, the price action actually has been sideways. The stock has literally been going sideways since a long time here, and the stock is finally, it went below minus 100. It went into bearish territory, but it did not really continue with that bearishness, right? The stock kind of reversed, and the stock has been going sideways or so. Second step is also you want to zoom out to the monthly charts or the weekly charts. Now, why do you have to zoom out? You want to find these multi-year support zones. Now, in the case of credit access Grameen, when you zoom out, you actually see there's a huge support zone here, right? This support zone is, as I said before, is since 2019 to almost 2022. And if you extend that, the stock is basically had given a breakout somewhere in April 2022. After that, the stock has just been going sideways. Now, this is what I call a multi-year support zone. Now, you have to identify such support zones on your stock that you're looking at. So once the stock comes in a scanner, open trading view, go to monthly charts or weekly charts and try to find, do you see such massive support zones? And if you find it, draw it and keep it in a chart, because that's going to be very useful for you to look at these zones and take a decision. Next thing is zoom into the daily charts, and you need to find what the trend is on the daily charts, because the trend can be down on the weekly chart, but the trend can be up on the daily chart. Now, charts, different time zones, charts can be in different trends. But here, what you need to do is identify the buy point. Now, here the stock is in a clear sideways, but here, once it broke down the support, the stock went in a downtrend. I know the stock has been consolidating for some time. Now you have to find the buy point. Now, on the weekly chart, remember the stock is about to reverse, so we're expecting the stock to go higher. Now, at this point, you need to know at what point you want to buy the stock, at least a small position. Now, here, take the recent pivot high. At this point, the pivot high is this, or the recent high is this, and you want to buy the stock when it crosses that buy point over there, right? So that's around 930, 40 levels, and you buy the stock above that weekly high or above the pivot on the daily charts. The pivot is nothing but the point from where the stock reversed, right? You can adapt any strategy, buy above the weekly high or buy above the previous week high. Anything can be adapted, or in daily charts, basically the previous week high would be somewhere around this point. Okay, so once you identify this buy point, next thing is waiting for the buy point to be get triggered and the stock to be bought, right? So once you buy the stock above this point, next thing is you need to identify what is the next point where you'll add more to the stock, right? Now, in our case, stock would have been bought around this day when the stock crossed that buy point above that point, but there was a huge weekly wick. Right now, remember, you have to keep your stop loss and you need to know what his exit point is also. But next point is, when do you buy the next time, right? The next buy point should be when the stock breaks out of the entire downtrend that we have seen on the weekly charts and the daily charts. Do not buy the second time above this point. So first position can be somewhere around 2.5% of your overall portfolio. The second buy point or the second position should be at least another 2.5%, which makes it overall 5%, but should be bought only when a stock breaks out of the entire downtrend. Okay, so that's the second buy point, and then you're done buying the stock, and you can add more depending on how the stock proceeds ahead. But you can also adapt the strategy for investing purposes as well, okay, or even for trading purpose. Now, that's how I would buy the breakout retest on multi-year support zones. I know it's kind of a little complicated. Now, for that purpose, I'm going to take another stock, which is Lincoln Pharma. I'm going to show you how it works in Lincoln Pharma. Okay, now in Lincoln Pharma, the first thing is the stock came into our buy zone somewhere around this point over here, which was around 21st March 2022. Now that was again around this point here. Now, if you zoom out to the monthly charts, you will see that there was a massive breakout around this point over here, and the stock is retesting that zone here around this level, right? And if you zoom here, that is the point when the stock first came in a CCI reversal scanner. If you see, CCI has crossed above -100 here, right? And now you need to identify a stop loss. You keep a stop loss on that point, or you take a small position and see how it behaves. Right now, just because you bought a stock doesn't mean the stock will go eventually higher. Stocks can consolidate for quite a long time. It is completely out of your control. All you need to know is what is the risk at that point, right? So you can buy how much ever you want, but the first position size should be a very, very small position size. Remember, the second position size, the second time you buy is when we're going to take a bigger position size on breakouts over here, right? So the first point you bought here, let's say you kept a stop loss around here. That stop loss would have been hit here, but then again the stock would have appeared in your scanner around this time over here, and that's when you buy the stock again. Now remember, the first time if your stop loss hits in your stock, try to buy the second time, because it's most likely that the stock will shake out, and now the stock might give you another good opportunity. Now at this point here, when you buy, then the stock stop loss wouldn't have been hit, and the stock again went sideways, and then you buy the stock again this point over here, and the stock breaks out of the entire downtrend. Okay, now that's the case of Lincoln Pharma. You can also go to the daily charts and see how you can buy it, but I'll summarize this quickly. First, you say needs to cross above -100. Then you zoom on to the weekly charts, find a stop loss, find an entry point, and buy it. If your stop loss hits, exit, and then again wait for a new entry. But if your stop loss does not hit, then try to find your second buy point, which is above the downtrend. So that's a simple breakout retest strategy on multi-year support zones. Okay, it's very, very it's going to be very, very interesting if you follow, see, and how this works. Especially even in a sideways market, this might do very well, because support zones, multi-year support zones, do tend to respect prices do tend to respect and they eventually head higher. Okay, so that's it for today. I hope you love the strategy. If you did like it, don't forget to subscribe to my channel and don't forget to like this video. Otherwise, I'm going to leave you here. Take care, stay safe, and trade safe. Bye bye.